Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Hey, everybody. Glad to have you on board. This is Craig Evans, and today we've got a very special guest with us. We've got John Sebree. John is the CEO of California Association of Realtors. John joined the California Association of Realtors as a CEO and state secretary in early 22, overseeing the association's objectives, the business development, strategic planning, legislative policies, and creating products so that real estate professionals can remain at the center of the real estate transaction and succeed in today's rapidly changing real estate market. John previously served as a chief executive officer of Missouri REALTORS for more than 7 years. Prior to his move to Missouri, John served as senior vice president of public policy for my state, the Florida REALTORS, for 11 years. Prior to that, he worked in the government affairs division of the National Association of Realtors, NAR, in Washington, D.C. for 13 years. John was a senior legislative representative working with the congressional delegations of 8 states. Prior to NAR, Sebree worked for 2 years for the U.S. House of Representatives Committee on Banking, Finance, and Urban Affairs. John's a native of Kentucky and received a bachelor's degree in business management from Northern Kentucky University, where he was a student body president. He's earned an MBA from George Washington University in Washington, D.C. Well, John, man, that's a mouthful, and you have had a career. So,
wow, hopefully no one was adding up those years as you were talking.
Oh, man. Well, listen, first of all, I want to say welcome to the show. It's good to have you. It was a pleasure meeting you last year and getting to know you. And so, I guess one of the first questions is, first of all, family is big to me and our company. So how did the new year treat you? How did your holidays treat you?
The holidays are everything. I have a farm in Kentucky. And so I host the entire family, all of my nieces and nephews.
Wow.
Interestingly, all of my nieces and nephews only have boys. So we have 10 little great nephews running around at my big barn, and I host everyone there on Christmas Eve and just really had a blast, and then came back to Los Angeles to celebrate the new year, and some of my family came back with me. So it was fun to be here with siblings and nieces and nephews celebrating the new year on the West Coast.
Because you're originally from Kentucky, if I remember right.
Yes, I grew up there.
So I'm a Southern boy. So growing from rural Kentucky, going into the nation's capital, working your way through that. Tell me a little bit of that process.
It was pretty fascinating because, I really am from a small town. This is a town halfway between Lexington, Kentucky, and Cincinnati, Ohio. There's not much there except the interstate goes through there. And so I went to college from a small high school. There were 25 in my high school graduating class. And I was very shy. Probably TMI, but at my freshman 101 public speaking class, if I thought I was going to have to talk in front of people that day, I would probably be sick that morning, just nervous thinking about talking in front of people. But fast forward, by the end of my college career, I was the student body president. Something just changed in me. College was such a wonderful experience, and I learned so much from those around me. And so that's what led me to Washington, D.C. Being a student body president, I was invited to the inauguration of President George Herbert Walker Bush right after my graduation. While in Washington for his inauguration, I interviewed him and got a job. So I went back home, packed up, and moved to DC. And when you are young, right out of college in DC, everyone, I mean, so many people are in your same situation and they become your family. You know, we're all like orphans spending Easter together and Thanksgiving together because you can't afford to get back home to where you're from, and meeting people who are now all across the globe from that 30 plus years ago. It was just a really wonderful experience and I was ready for it. So I think that was the thing. I was craving something different, and I got it in Washington D.C.
Well, I was actually just going to ask you, growing up in small towns and coming into what you are now, as a dad with two daughters, I'm always trying to encourage them in areas to look in life. I mean, when you were a kid growing up in that area, what did you want to be growing up? I mean, you're talking about your you
Right.
were nervous and shy, and what was your thoughts growing through that?
So I first thought I wanted to be an architect, and I looked into that. The University of Kentucky has a great program, and then I started thinking, I'm sort of interested in public service. And to be in public service, you sort of need to make a little money first, maybe. So maybe I should go into business. And so I honestly lucked into my major in college. I feel looking back, I wish I had had a little more direction, but then I'm glad that I lucked into what I did. I chose business management, and within business management, you had to choose a track. I chose organizational behavior. The interesting thing about that is organizational behavior helps you understand what makes people tick, how you get the most out of employees to reach success. And that experience as an undergrad all those years ago has helped me in every job I've ever had. And just one quick story, being in organizational behavior as an undergrad and reading the textbooks and hearing from your professors about how you should be treated in a business environment. My very first job on Capitol Hill in Washington was for a member of Congress who shall remain nameless, who screamed at everyone every day and who loved being the bully. And people left crying each day, and something inside me knew that wasn't how you treat people. And I stood up to him. Here, I was a kid who needed my paycheck, to make the rent payment. And I stood up to him and said, "You don't treat people that way." No one had ever done that. He respected me so much more after that. And here I was, 21, 22 years old, standing up to a longtime member of Congress because he was the textbook example of how not to treat people. So I think I learned more from that. If I had left college and worked for the nicest person who treated everyone great, I would have just thought, well, this is how it is. This is what I read it was supposed to be. And so instead I learned more, and it's sort of a baptism by fire.
But culture matters, doesn't it?
It sure
Culture
does.
matters, man. So, well, that's cool. So, let me ask you this: Did housing just strike a chord, or did you kind of fall into that process?
I've had a lot of dumb luck in my life, haven't I? Now that you're raising this, I'm feeling like I'm falling into all these things. So the
So,
year
hey, sometimes it's better to be lucky than good, right?
Yeah, that's true. So this is what will date me if you didn't already with all the years that you put out there. So my time on Capitol Hill with the U.S. House Banking, Finance, and Urban Affairs Committee was 1989 and 90. This was the savings and loan crisis, and that's all we did. I was on the General Oversight and Investigation staff, and we traveled the country working on credit crisis issues, having field hearings, talking to homeowners, bankers, realtors even. And so it was during that time that the realtors were spending a lot of time in our office, as were Fannie Mae and Freddie Mac and others. And one of them came to me and said, "Hey, the National Association of Realtors has an opening for this lobbyist position. We think you'd be great based on what you're doing here." And so I interviewed for the job and got it. So after 2 years on the Hill, NAR hired me away to do housing issues. And so that's how I fell into the realtor organization.
That's pretty cool. So,
It could have
so
just as easily been the bankers or
yep.
the mortgage bankers or some other group that hired me away from the hill, but it was the realtors and I stuck with it.
So that was 88, 89. When did you move into Florida then? I'm trying to remember.
So I was with NAR 13 years. I moved to Florida at the end of 2003.
Okay, so you were there. That would put you were in Florida during the recession then.
I was, yeah, these kinds of things tend to follow me as well. So I
So
have these baptism by fire moments everywhere I go, it seems. Well, I got there and things were fairly quiet. Let me tell you a quick story about that. I've been at that point, I'd been in Washington 15 years. I'm lobbying the White House, government agencies, all these congressional offices. George W. Bush was president at that point.
right.
Fast forward all those years, my friends at the White House said, "You're moving to Tallahassee, Florida? The president's brother is the governor. We got to set up a meeting like right after you get there." So I sit down with Jeb Bush within a couple of weeks of being in Tallahassee, and he said, "Did you know I was a commercial realtor before I got into public office?" And I was a little embarrassed that I hadn't done my homework, I guess. But Jeb Bush had been a commercial realtor in Miami, knew our association incredibly well. And he said to me, "You're about to wake a sleeping giant. The realtors can do so much more in the public policy arena than they're doing. And I'm going to work with you on this, basically." And so we had a really good relationship. I went with Jeb Bush on his trade missions. Uh, had great success in making the connection between real estate and economic development. And I've created a passion for that I spend a lot of time on now, helping realtors understand the role they play in the larger economy. So, yeah, a lot goes back to those first few weeks in Florida.
So I was going to say, tell me about your experience of that kind of leading up to the kind of the crash in '08 and you're kind of gearing and heading through that, especially from a real estate side of things, climbing out of '08. Tell me some of those processes and what you experienced through that.
Yeah, so at that point, I'm in Tallahassee. I'm not the CEO of the state association in Orlando. I was running the political policy operation. So I immediately went into this mode of educating legislators and the governor. The governor came to me and said, he asked, "What is a short sale?" Because suddenly he was hearing about this in the media. And I don't blame a governor for not knowing what a short sale was in, early in that crisis. But I educated and I was in touch every single day because I knew there would be legislative policy positions that could be taken to help get us through all of that. And so working directly with the House, the Senate, the governor's office, federal government agencies, we were able to really help our members be at the center and help the public pull through something as traumatic as all of that. So that was a really important time for me from a policy perspective.
So let me ask you this, and I don't know if you had if you were able to see an effect change in this, but Florida's a legislative state. The foreclosure process takes longer in Florida than it does in judicial area, things like that. How did you see that affected the recovery, and were you able to affect those processes from Tallahassee?
Yeah, we created toolkits for our members so that they could easily find things on the website, and then we would populate it and change it constantly through our coalition partners and meeting with banks every day to talk to them about the pain points that our members and the public were having and trying to create new systems and that kind of thing and put legislative pressure on banks to maybe change the way they did things or appraisers, appraisal management companies. It's hard for me to remember back now to everything we did at that time, but we hired an outside consultant to come in and do studies for us on those pain points and how to help the public get through those easier and better. And yeah, I'd
Well,
almost forget about it, but thank for bringing all this up.
I'm giving you flashbacks. So well, let me ask you this, because you're in a state now that I am kind of growing into and got a love for. Obviously, we've got a presence there and a long time presence there with the Norris Group. Florida is my state that I currently live in. I've been here for 18 years, something like that. So for that, and I'll be honest, John, that's why I really enjoyed meeting you and getting to talk to you, because you've had your feet in both states. So but with you being in Florida, what do you think was your proudest accomplishment, the biggest win that you had in Florida?
There are a lot of things I look back on, but one was after the Gulf oil spill.
Okay.
It really impacted 5 states, but the Gulf Coast of Florida was incredibly impacted. And people have probably forgotten about this unless they've watched the movie with, is it Mark Wahlberg or someone is in this movie about the Gulf oil spill. Or maybe it's Matt Damon. But anyway, we jumped into action immediately because home sales completely stopped along the Gulf Coast, all the way from Pensacola down to south of, even around to Naples. Like the entire Gulf Coast was impacted. The President of the United States implemented a Gulf oil spill claims facility for those that were impacted. They were not going to consider real estate as an impacted class. Maybe they thought it was too big or something like that. So we jumped into action, and I went directly to Ken Feinberg. If that name rings a bell, Ken Feinberg is who was in charge of the 9/11 claims facility for all those who were impacted by 9/11, the families, and he led that. So then the President of the United States called on him to lead this effort because he had done that one. So I worked directly with him, became very close to Ken Feinberg, and we had a carve out for real estate professionals because of the work I had done in Florida on property insurance at the time. I was traveling the world, meeting with Lloyd's of London and, other major reinsurers to try to get Florida in a better place with insurance. Now I see history has repeated itself in Florida because all this is coming back, but I can't be blamed. I've been gone, but at the time we dealt with those insurance issues. I had all these connections. So we created the call centers. We did all of that and got millions and millions and millions of dollars into the pockets of those who were impacted. And it's something that, you're not going to read a lot about, but we made a huge difference for those who needed it at the time. I remember Ken Feinberg came to testify before the state legislature, and he called me and said, I'm not walking into that room unless you walk in with me, because they and I walked in with him and sat there right behind him and supported him because of the work that he had done in Florida at that point. So that was something pretty specific, but it's something
that's a big deal. Yeah, and that was a big deal for the state of Florida. That was a huge process. And like you said, all 5 states were affected, but living here and going through that was a big deal. That was a big deal. So, well, listen, let me jump into a few headlines real quick if I can.
Sure.
2023, kind of the whole thing in real estate was interest rates, right? I mean, everything was interest rates for 2023. I remember in 2022, so many people were saying, the market's going to drop 20-25%. Here's what interest rates are doing. Process is, we didn't see that much of a drop, right? We didn't see price damage, things like that. We did see a drop in the volume of sales, especially in California, right? You've been in California now. There's a considerable drop in California. With rates now that we're seeing them, what they're down 1.5 or so in the last 90 days.
Yes.
They were up a couple bips yesterday, but I mean, we're really kind of seeing that downward trend. What do you see? I'm not asking for you to whip out your crystal ball, but what do you see? What are you projecting? What do you look at for 2024?
Yeah. So just first answering the 2023 part quickly, our members and the public had a really tough 2023. We ended 2023 with the lowest home sales numbers in California in 16 years.
Yep. Yeah, it
That's
was like 50% decrease in sales volume.
It is. It is. So the volume way down, like you said, prices not, but that's a product of supply and demand. So I have been talking to a lot of our members. I'm on the road almost every day. We have over 200,000 members, and I'm trying to get everywhere I possibly can. And I see light at the end of the tunnel. You mentioned interest rates coming down. I think they're going to become a more normal number to people. They're never going to be 3.5% again. But buyers are going to start getting used to numbers that are more in the 5 and 6% range. So as that normalization happens, we are actually predicting about a 23% increase in home sales in California in 2024, which is huge. That is the light at the end of the tunnel.
That's a big number.
Oh, it's wonderful because finally, there are so many out there who are sitting in their house and they don't want that house anymore. They want to downsize, they want to upsize, but they're not making a move. And so once we get people off the fence, it's just going to create a wonderful ripple effect throughout the economy. And so there will be lots of positive sales and purchases.
Well, and even I know you and I talked about this some at the I Survived real estate event in November, that if prices stayed the same and then there was no price damage, you've got a 50% cut in sales volume. In essence, that's a 50% loss in jobs from the real estate. So your members, the real estate community of California, saw a loss of 50% of either their income status, everything. So that'll be a good process to see if we can hit those type of projections. That's going to be fantastic for the state of California.
It is. It's huge. People don't realize how hard a realtor works and how little they make. And so, the median price of our members is very, very low for 2023. But that increase in volume is much needed. And again, I am preaching that there is light at the end of the tunnel. So hold on.
Good. Well, listen, if you don't mind, I'm going to jump into some. I had a couple of things I want to address, but I know over the last, the end of 2023 for NAR, National Association of Realtors ended in kind of a turbulent fashion, if we will, with the lawsuits and everything that came to play. I was going to ask a different question, but all of a sudden I heard that last night there was some different news that came out in the state of California. I know I saw that you guys have put a statement out. Can you share some of that with us?
Sure. Yes. As you mentioned, October 31st is a date that we will not soon forget. That's the date that the Burnett verdict came down in Kansas City. And since that date, there have been copycat lawsuits all over the United States. I think very little effort put into determining how states operate differently. If you're a trial attorney, you're just thinking, oh, this could be a great payday for me, so let me slap another state, NAR, and another state and some other companies with just a copycat suit. So that has been happening all across the United States for the past several months, and we've expected it to happen in California. Finally, yesterday, in addition to NAR, a number of local associations and MLS and some companies, CAR was listed as a co-defendant in a copycat seller lawsuit. So we are there, but again, we planned ahead. We know California is a little different. We have buyer agency agreements. Our contract that every seller signs has.
Yeah, John, excuse me. Can you touch a little bit about what the actual lawsuit alleges?
Yes, yeah, sure, of course, Joey. So all of these lawsuits, for the most part, claim that the seller doesn't know that part of the commission they're paying is going to the buyer's agent, and that they shouldn't have to pay for that buyer's representation. Now, obviously, it's the way it's been done for many, many years, and it's possible that in some states it's not clear to the seller that they are paying the part of the buyer's commission, or that part of the commission they're paying is going to the buyer's agent. In California, it is clear. We have operated differently in California for many, many years. It's a special line item in the contract that the actual amount of commission, the percentage that's going to the buyer's agent. So it's firmly there. We are a very pro-consumer state. And then not to mention, in California, non-realtors have been able to put listings in the MLS since the 1970s. You know, there's this thing among many of the trial attorneys that, oh, you know, you're this cartel and, you know, you don't let anyone in but those who are part of the club. Well, we have operated this way in California since the 1970s, where you didn't have to be a realtor to a member of a local association to put your listings in the MLS. So we're just different. So, but that doesn't prevent someone from filing a lawsuit. We just know that we have a very good defense, and we'll jump on that. But it will make our members nervous that we've been sued.
Well, and that's what I want to make sure and get out, because I knew that was coming after reading that and talking about it, and I wanted to make sure and give you some space, even with, you know, the listeners that we've got, so that we can get out to the members that are part of our listening group to know and understand that, hey, you know, car is already on the ball and they're working through that process, you know, that you were prepared for, you know. So you know, I know there was another law recently passed from an investment standpoint that prohibits from being able to perform a credit check on prospective tenants. What is your experience of working with California and the government there, the state government, from an aspect of housing?
Yeah, so I'm coming up on my 2-year anniversary here in California, and I will say working with the California legislature is quite different than my previous 2 states of Missouri and Florida, where we had, you know, majority Republican legislatures. And I don't want to be political here, but I will say the California legislature is not a majority Republican legislature, as
Right.
you know. And my biggest concern with the California legislature is that they are in a renter nation mindset, and they are overlooking the benefits of generational wealth building from home ownership, and they're completely missing the boat on that. Now, I will say in the past year, Democrats, Republicans, independents, no party affiliation, candidates, everyone is talking about housing in California because we are at a crisis point. Whether it's the homelessness issues or whether it's just the lack of availability. And so from the governor and attorney general on down, they are actively suing cities that are not meeting their minimum affordable housing quotas, because they do have those. And California Association of Realtors actually set up a separate nonprofit that we call Californians for Home Ownership, where we have a team of attorneys who are also suing cities and winning, because the cities are playing games and they're engaged in the not in my backyard theory. And so we are winning, and we've got the support of many. So the tide is turning. I think you're going to see, you know, there are a lot of issues in California where the tide is turning.
Yep.
Whether it's crime, people are sick and tired of cities like San Francisco or Oakland or LA having district attorneys who allow people to walk into CVS or Walgreens and steal up to $1,000 because they know they're not going to be prosecuted. You know, you might say that's not a real estate issue, but it is. Everything's a real estate issue. We should care about crime. We should care about education and all of these other issues. And so we are seeing the pendulum swing. Just last week, the legislature came back for, the beginning of the session for 2024. And while I'm not in Sacramento, I'm following the news every day, and I get there quite a bit. There were Republicans and Democrats holding press conferences on crime and how they're going to tackle this in this legislative session. So again, I'll say it again, I think we're seeing the pendulum swing on a lot of these issues where people, common sense Californians, see that elected officials are out of touch and have been out of touch, especially at the local level. And let me just tell you one other thing. Soon after I got to California about a year and a half ago, we work very closely with our local associations. We worked with the San Francisco Association, and we funded their recall effort of the district attorney and the school board, and we won both. And it starts at the local level. When you can have wins like that, because unfortunately, that elected official at the local level who's doing these things gets termed out and then moves on to the state level, and they become a state legislator, and before we know it, they're a member of Congress. So we've got to deal with these issues at the local level, and we're doing that successfully as a partner.
Well, John, I know as we kind of wrap this up and come in our time, I know that I will say I'm glad that you're, as much as I would miss you from being in Florida, I'm glad that you're there in California doing the work that you're doing. It has been an honor and a pleasure to have you on and for you to give your message to your members and to hear what's kind of going on in CAR and what you guys are doing. I appreciate all the work that you do there from the realtor side of things, as well as the legislative and trying to affect legislative change. So I will say, kind of greedily and selfishly, I want to ask you a question if I can before we go. You were with us last year in November at I Survive Real Estate. Can I count on you being there again this year as a panelist for me?
I would love it. As soon as you have a date, get it to me and we'll get it on the calendar.
Fantastic. I'll make sure Joey gets that over. It'll be a privilege and an honor to have you on the panel with us again this year. And again, guys, listen, we want to thank everybody for being here today and listening to what we've got and listening to John and the wisdom that he brings to the table and all of his life experiences. And we just want to say thank you for being here, and everybody have a good day.
Thanks so much.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.